All the content contained in this webcast is for informational purposes only. The investments and strategies contained in this webcast may not be suitable for you. Please consult your own independent financial advisor before making any investment or trading decisions. Good morning, traders and investors around the world. Welcome to premarketinfo.com, where we prepare you for the most important hour of the day, the first hour. Well, Dennis, we don't need to talk about the S&Ps. We don't need to talk about Apple. We just need to talk about Facebook.
Facebook obviously don't have a chart for you guys yet because the stock isn't out, but it will go. It's going to start trading around 11 a.m. Eastern in the secondary market here. IPO price was set last night, $38, so at the high end of the range. Joel, I'd be shocked if this thing opens under 50.
Yeah, Dennis, you did the blog earlier in the week and have taken a lot of heat. People are talking about valuations and cash flow and earnings. That's not why I wrote the article, Dennis. This has nothing to do with the company itself. I am just talking about the pent-up demand for retail investors to participate in the market. And this Facebook IPO, to me, is the ample opportunity for someone that has $3,800 to buy 100 shares of Facebook.
Yeah, and that I got what your point to the article. I think a lot of other people, are obviously, a little bit more sophisticated. But if you just look at an average bear that doesn't really invest in the market, but is, big fan of Facebook, avid fan of Facebook, and they might just say, hey, oh, Facebook, that's going to be the future. I can retire on this. And they find their $3,800 in their mattress, call up a broker, and say, hey, I want to get 100 shares of this thing. You will get that retail demand. You'll get some demand from people who don't even play the stock market whatsoever. So I do agree with you off the hop, and I think right off the hop, the thing could get a pop, depending on where it opens. Like, this thing starts open over 60. Then you're going to have a lot of people dumping that got this thing at $38 last night. So, if it opens under 50, then I would be prone to think that's going to get a pop. So it all depends on where it opens. Like, sometimes you'll see these things open, it'll rally, $10 in a matter of seconds almost, especially when there's not that much liquidity, and it's going to be a wild ride, Joel. That's all we can say on Facebook. It's
Yeah,
going to be.
I just want to bring in a few fundamentals here. I was talking with a buddy of mine who's a fund manager last night, and he emphasized GM pulling out earlier in the week on the advertising, and they were saying how per dollar per click they weren't getting it, and I'm like, who cares about GM? I mean, cars are going to sell. People are going to go buy cars, whether they're buying them through an ad or Facebook or whatever. I think the main reason I'm going to be looking to buy this stock is I think Zuckerberg must have some other plan, some other way to bring revenue into Facebook. Besides, whether he's going to do something with the advertising or something, I think there's something else he's doing. That's why he IPO now, and that's the reason I'm bullish the stock.
Well,
but go ahead, Dennis.
Just on that point, Joel, and I kind of agree with you. Like, you got to think, 600 or 700 million users, crazy amount of users. If they can ever figure out a better way to monetize it, because let's be honest, right now, I've been on Facebook, I never click on an advertisement. But if they can ever figure out a better way to monetize it, because I seen an article go by there just a few days ago, can't remember where I read it, but they were saying that Google makes $9 per user, and Facebook only makes just over $1 per user.
Oh.
So if they could ever get into a $3 or $4 or $5 per user range of making that kind of money off of them, obviously this stock could really take off. So they definitely got to figure out a better way to monetize it, but they have the users, and their users are loyal, Joel.
I mean, think of another product or another company that's going to public with that many users. I mean, it's simple mathematics. But, Dennis, we can't talk about Facebook the entire day. Let's just talk about the S&Ps yesterday. Really broke down. We traded below the yesterday's low, got down to 1293.50. Traded in between the lows at the end of January. We're getting a nice bounce here. I see resistance at 1311. Sure like to see us clear that area. Above that area, Dennis, things really open up to the 320 area. The only thing I'm a little worried about is, we've already had a pretty big range already. So unless we're going to have an expanded range up to the upside, we're going to have a lot of trouble here at the 1311. Moving on to our market movers, Dennis. J.P. Morgan getting a little bounce this morning.
Bouncing a little bit here, Joel, but I mean, this is what we've been saying on the show. You can't buy this stock long term. You always can make a trade, but for you swing traders or even investors out there, when you're picking bottoms and stocks continue to make new lows every day, you just can't be picking the bottoms like that. Even though you might be saying, "Oh, we're going to come into some support here in this whole 33 area," but picking these bottoms has been a disaster for this. I mean, the thing opened 38 after the big news, tanked that day, got a little bounce up in that whole 36 area, but when it took that out 2 days ago, that's your sign this ain't seen the lows yet. Falls another $1.50 yesterday, 33.93, getting a little lift, 34.15. But I'm not too excited when things, bouncing 20 cents and the market's up $6. It's just, basically, just moving along with the market here. And I wouldn't be surprised if the sellers come out here again. And if this thing takes out yesterday's low, which it closed right near there, 33.88 and 33.93, I'd look out below.
Yeah, Dennis, I just want to. We talk a lot about gaps and that kind of that formation. But if you look at J.P. Morgan, it did have a gap at the beginning of the year when this whole market gapped up. It had a 33.42 high, gapped up to 34.01. So I think we're definitely going to come down. Yesterday's low was into 33 handle, 33.88. I don't think that they're going to get it this far and not fill that gap from January. And then coming back on the upside, Dennis, I mean, we have floated up to 34.40 in the pre-market, but phew, I tell you, I'd use the half numbers, 34.50 and 35, because there are value players, that are looking at or algorithmic traders that are buying it so many standard deviations from so and so close, and they keep buying and buying and buying and buying. They don't care. They're kind of like the Warren Buffett style. You keep buying, you keep buying, you keep buying, and eventually you get a bounce. But that's why this thing is just not going to rip and go back north.
Yeah, and the key is like we say, the algorithmic, the high frequency traders are buying, but they're selling at the same time too. So they're sitting in there just scalping the spreads. So it's not like these guys are accumulating huge positions and underwater. These guys don't take risks, so they just sit in there and they keep buying, and then they sell, and then they buy and they sell. And that's why I just can't, because they're always flipping, and they're always getting on the offer right away, and they do sneak out because they're the quickest. And when the going gets tough, they're the first ones that are going to get out on the bid too. So you can't compete with the high frequency guys for speed, but don't try to mimic and don't try to pick bottoms on stocks that are making new lows. That's kind of the point that I'm trying to make here. Citigroup, Joel, it was destroyed yesterday too. I mean, all of these banks. You got Bank America, Joel, trade under $7 yesterday. This has been marching down ever since it's made its highs up in March, over $10. It's now under 7 here again. Actually, it's bouncing up this morning, trading 707. But what's your take on these banks overall, Joel?
Oh man, I tell you, all these lower highs in Bank America, several of them. I mean, we'll see what happens. See if the dust settles here around $7. There was support for the stock back in February. So if you can get, 2 or 3 or 4 lows, 695, 688, 692, something like that, it might be good for. I mean, I can't be as bearish as stock at $7 as I was at 10. So could get a little pop up to 850 here and to be a 50% retracement of the move off the high. So. I'm not shorting Bank America down here.
It's hard to short these stocks now, just for the simple matter is that a lot of people are in that trade. It's probably a crowded trade where a lot of people are short these banks, and you will get vicious spikes when everybody is short stocks. It's kind of like when stocks are marching higher, you'll have these vicious shakeout down. Same thing when stocks are marching down. You have these vicious spikes that can happen. This thing could pop 50 cents in one day on no news, just on short covering. So that's how usually bottoms are put in. Eventually, too many people get short the thing, starts to squeeze them a bit. Then a short squeeze comes on, and then once it starts covering and starts moving up, then other value or longer term traders are buying it, and it just makes for a bottom. I don't think we've seen that here yet. That will happen probably within the next few days on some of these issues, just because it's been such a sustained sell-off in some of these banks, Joel.
26 looks like a good number in Citigroup, though, Dennis. I mean, if you're a longer-term trader here and you want to bank on 26.33 being yesterday's low, You have a low at 26.13 at the end of the year. It's funny, Dennis. We're getting to all these levels for a lot of these stocks of from the gap day up on January 1st. So getting back to the beginning of the year, maybe it's a chance to to replay the move again.
Yeah, you're right. That 26 does look like pretty decent support. So if you're a bottom picker, but make sure you have a stop in there. Make sure you have some type of mental stop. And I don't like placing physical stops out there because the high frequency guys sniff those out. They'll go try to execute your stop. So it's better to just watch this trade or have some type of system where, it's not on the books there, because if there's an order sitting there on the books, they know it's there. They'll go and try to execute your stop to try to shake you out. They do that even for a couple hundred shares, man. They'll move the price around to get your stops. So you don't want to put the physical stops out there, but have mental stops. And if it starts trading below 26, then I'd get nervous if I was going to try to pick a bottom on this thing. Apple, Joel. We better move on to Apple. We're going to run out of time. Apple had a breakdown day yesterday. We've been saying once this got through 555, it's going to be in a world of hurt. It's exactly what has happened. Took it out 3 days ago. Went down the day before. Had a terrible day yesterday. Was down, what was it down? 530.12. Closing right at the low of 530.12. Never a good sign. It is getting a pop here today, but I'm not sure about Apple longs here, Joel. What do you think?
I think if it got above and held 536, I'd be looking to buy this thing. There's nothing but air up to 547.50. The 530 area, now that the stock established a low at that area, if it goes through that area below 530.12, don't get too carried away. Place your stop at that level because you could get a pop down to 528.82 and then whoosh, be back at 535 in a heartbeat. But Dennis, you had an interesting point about Apple as far as using the options markets.
Yeah, actually talking with my friend there. I went to a ball game yesterday, talking with one of my option traders friend. He's an excellent options trader. And he's just saying, if you want to own Apple in your portfolio, and this is more from an investment, not a trade here, talking to you investors that are listening to the show. Say, oh, I like Apple here, I want to buy it here, I want to buy it if it gets down to $450, something like that. He's and he's a portfolio manager, but uses options in his portfolio. And he's like, there you can buy or you can write the Apple puts, the 485 January, so going out 7 months, for $46 right now. So basically, that put is $45 out of the money. You get an extra $46. That would put you at an average cost down there around $440 for the stock. So basically, if you don't know, you write a put. So let's say you want to own 100 shares of Apple. If you write one put at 485, if it goes there, before January, you own the stock, but you're going to get 45 points for that or 46 points for that. So you'll be averaged in at around $440 on those shares. If it doesn't go there, you keep your 45 points, which is on 100 or on one contract, which would be $4,500, and you walk away. You keep your $4,500. So if you want to own Apple, it's not a bad call to maybe write a put on it instead of just going out and picking up the stock and trying to pick a bottom. That's how he's playing it, and that's not a trade. I don't ever suggest to do these, writing puts and stuff, because it's hard to control the risk on that kind of stuff from a trading perspective. But if you're an investor, that's an idea for you.
Dennis, I gotta leave. I gotta go call my broker.
You're gonna write putts, are you, Joel? Yeah, so
my whole portfolio.
My whole portfolio.
And you call me an Apple hater.
And you're gonna write puts on Apple. I mean, if Apple got to $440, starting to get the multiples, starting to get cheap. I mean, anything can happen. They could have, revenue problems. They could have, all of a sudden iPhones, aren't the new wave, and so anything can happen long term. So you always have risk. But, I like the risk return on a play like that, especially from a portfolio perspective. Because we always talk about trading. So sometimes, for our longer term listeners, you need to talk a little bit of portfolio management as well. So it's not a bad idea. Moving on, though, we can't just keep talking. We've got a lot of other movers here, Joel. Foot Locker here reported earnings. It is traded up. I don't know. Like I was saying before, some of these stocks just get ridiculous. 31.68 is the high in the pre-market. I don't think it's even going to sniff up there. It reported here earnings here this morning. 29.50 is where it's bid right now, so it is bid up pretty good. This whole 29.50 to 30 area, I think, could provide you a little bit of initial resistance, maybe off the hop. 3168 was only a couple hundred shares of trade up
Yeah.
there. I mean, it ain't getting back up there, Joel.
Okay. Really, the number I'd keep an eye on is right here, 2963. That was the high back on May 10th. Things look pretty wide open after that, Dennis. You had a gap down day on May 8th. So the high the previous day on the 7th was 3065. So if it can get through this 2963 area, I would look at 3065. And then lo and behold, Dennis, on May 4th, we had a high of 3170. So that coincides with the 3168 high in the pre-market. Very scattered trades in the stock. I guess if you're playing it from the long side, you really don't have a support until yesterday's high at 2896.
Salesforce.com reported after the bell last night it is getting a nice lift. Closed at 133.80, now trading 144, so this stock is popping right up. Between 140 and 150, I don't see a heck of a lot, Joel. I was looking in the chart, I'm like, I don't know. It's trading 144 right now, but I don't see a heck of a lot in there. I mean, anything, it could be, but just looking on the chart, there's major resistance up at 150. We get up to that area, you maybe want to try a short, but this 144, what you got any levels in there, Joel, or?
Just to give you the pre-market high, Dennis, 145.28, which is smack dab in the middle of the two areas that you mentioned. If you want to be patient on this thing, if you could get a pullback here to 140, 138.98 was yesterday's high. You're not going to see that. You had a couple highs in the 140 area. That what I would look if they started to whoop it off the open. I would look for 140 to cover some early shorts or nibble it along.
The Gap reported last night GPS, and that's trading up here in the pre-market as well. It's trading 26.95 after closing at 26.31. So getting a little lift up here. You had multiple lows there, Joel, in this whole 27.34 area. I don't know why they pick it. It's a kind of a funky number, but you had a low 27.44, 27.37, 27.34. So that whole 27.34 area might provide some resistance just because if you have the whole old support becomes new resistance type of theory going on, that's only 40 cents away from here. Maybe that gives you a little resistance.
Yeah, Dennis, actually looking at the pre-market, of course, some folks got real carried away here. We made a high at 28.76, which is,
Out to
way
lunch.
up here.
Out to lunch.
Way out 29.19. Let's see, high of the move at 29.23. Dennis, we haven't even traded through yesterday's high yet. Right now we're trading below at 27.24. So if you get a chance here, this thing goes through the 27.24. You got some pretty good real estate on the upside. I would look for major resistance at the $28 level.
Well, we're starting to run short on time here, so obviously all eyes will be on Facebook at 11 a.m. Keep an eye on that Apple if it starts making new lows, and the JP Morgan for that matter. Those start making new lows, I'd get a little bit nervous. We're getting a spike up here. It is options expiration today, so you will see some added volatility right off the hops. Be careful with your opening prints. Sometimes some stocks can open pretty wild on these option expiration days, especially on days that they were wild the day before. So you're going to see some really good volatility here off the hop, which can often be a good opportunity for some of our traders. Any closing thoughts there on the market, Joel?
Just on two stocks in the Big Ten, Dennis, this Exxon Mobil just held up like such a champ over the last couple days. Just doesn't want to spend much time over 82, multiple lows between 81.53 and 81.96. So it looks like XOM's trying to put it in the bottom here. You got a formation here on the upside we always like to look at. You got the old quadruple top from 33.52 to 33.60. If in fact it can take that area, I'd look for a move up to the all-time high. And we're keeping a high on 13.11 in the S&Ps if resistance. If we can clear that, we'll have expanded range day to the upside. Coming on the downside, I'm sure some buyers or people that were short yesterday will be looking to get out at the mark at 1301 and a quarter down to 1300. So have a good weekend, folks. Look for I'll Have Another along with either pretension or creative cause for the perfecta. We'll be back with you on Monday.